Chapter 8. The quality of the food and service offered by a food service operation is a major factor in determining whether the operation will be successful. However, taking steps to ensure that the operation generates significant revenue while keeping expenses to a minimum is just as important. Applying the required math skills is necessary in order to analyze these business aspects of a food service operation. Banquets and catered events require additional planning to ensure that all costs are identified and factored into a pricing strategy. A profit is the amount of money earned by an operation when revenue is greater than expenses. A loss is the amount of money lost by an operation when the revenue is less than expenses. To be profitable, management and workers need to make consistent effort to maximize revenue, minimize expenses, and maintain quality standards. Revenue can be maximized by implementing creative marketing strategies and training servers to be effective salespeople. Sometimes the price of a particular menu item is intentionally set low. The price can be set so low that the food service operation does not make any profit or experiences a small loss on each sale. A menu item priced in this manner is referred to as a loss leader. A loss leader is a menu item priced artificially low in order to attract more customers. Food service operations often set goals to increase revenue by a certain percent from year to year. See Figure 8.2. When actual revenue amounts are known for 2 periods of time, the percent increase from one period to the next can be calculated. If the new revenue is less than the original revenue, the result will be a negative number. This indicates a percent decrease and is calculated with the same formula using to determine percent increase. It is not uncommon for revenues to fluctuate from month to month. However, revenue should increase each year if a business is to continue to be successful. Even though maximizing revenue will contribute to higher profits, it is equally important to minimize expenses. The first step in the process is to realize that everything has a value, including ketchup, mustard, salt, and pepper. Expenses that may seem insignificant at first can add up to substantial amounts over time. The focus on earning a profit starts with the planning of the menu and continues with the purchasing, receiving, storing, preparing, and serving of food. In addition to calculating the appropriate prices to change for menu items, other considerations must be taken into account when planning a profitable menu: kitchen equipment, employee skill level, seasonal ingredients, customer demand. Purchasing involves the selection and ordering of products required to prepare and serve the items on a menu. A purchase spec is a written form listing the specific characteristics of a product that is to be purchased from a supplier. Depending upon the product, the information on the purchase spec may include the product's quality or grade, variety or place of origin, size, or packaging requirements. It is also common for the purchase specs to include food safety requirements, such as the temperature at which products must be transported and received. Another opportunity to help control costs is when the food is received from suppliers. All products should be checked upon arrival to ensure that the product received matches the purchase specs. Products should be weighed or counted to make sure that the amount or quantity received is the same as on the invoice. Storing foods properly is essential to control cost. First in, first out, known as FIFO, is the process of dating new items as they are placed into inventory and rotating older items to the front of inventory and the new items behind. In addition to following a standardized recipe, one of the most important ways food service workers can help minimize expenses is to serve food using the proper portion control techniques. Portion control is the process of ensuring that a specific amount of food or beverage is served for a given price. This is accomplished by using portion control equipment such as ladles, portion control scoops, scales, and slicers. Gross profit is the calculated difference between total revenue and the cost of goods sold. Gross profit can be thought of as the amount of money that is made by the food service operation as a result of charging more money for the food items served than the amount spent producing these items. Net profit is the calculated difference between the gross profit and the operating expenses of a food service operation. Net profit can be thought of as the amount of money left over after the gross profit is used to pay all the operating expenses incurred by the operation. A standard profit and loss statement is a form that shows the revenue, expenses, and resulting gross and net profit or loss over a specific period of time. The purpose of a standard profit and loss statement is to provide management with an indication of the financial status of the food service operation. A standard profit and loss statement can be prepared at a summary level or at a detailed level, depending upon the complexity and needs of the food service operation. Standard profit and loss statements often show expenses and net profit in terms of a percent of revenue as well as account dollar amounts. One way of illustrating expenses and net profit as percent of revenue is through a pie chart. A pie chart is a circle that is divided into pieces where each piece represents a percentage of the whole circle, or pie. The sizes of the pieces are proportionated to the percent of the whole pie that each piece represents. Reviewing financial information in terms of percents instead of dollar values can often be more meaningful. When the percent associated with a particular expense item changes significantly from one month to another, management should take a close look at that expense to figure out the reason for the change. A break-even point is the minimum amount of revenue a food service operation must have before the operation can make a profit. The break-even analysis can help determine the likelihood of a restaurant being profitable. Calculating a break-even point is a good place to start when evaluating the profitability of a brand new concept. However, estimates for expanding an existing operation are performed differently. To estimate the profitability of a second location, the owner needs to first establish the revenue and the expenses. Based on this estimate, the owner can decide whether earning additional profit per month justifies opening a second location. Additional topics must be considered when planning and setting prices for special events, such as banquets and catered events, to ensure the operations are profitable. Another term used for banquet is on-site catering, because food is prepared at the same location where it is served. In contrast, off-site catering occurs when food is prepared in a professional kitchen and then transported to a separate location before being served. The menu and services may vary from both banquets and catered events depending upon the specific needs of the customer. The number of people attending the event must be known to figure out how much food to order and prepare, how much space will be required, and the number of staff needed to prepare and serve the food. If the banquet facility or caterer does not have all the equipment needed to execute the event, virtually anything can be rented from a rental company. Commonly rented items include tents, tables, chairs, flatware, glassware, linens, chafing dishes, and serving platters. For off-site catered events, the method of transporting the food to the food service location needs to be determined. Insulated containers are used to keep food at safe holding temperatures during transportation. Prices can be based on a target cost percentage or a contribution margin. Target cost percentage pricing is most appropriate for small special events that are limited to the serving of food and beverages in a traditional atmosphere. For larger special events, especially when temporary staff needs to be hired or outside equipment is rented, contribution margin pricing is more appropriate. To estimate the gross profit, the cost of goods sold must be calculated. The cost of goods sold is equal to the as-served cost of the food and beverage, since inventory is not maintained for a one-time event. The key to assuring that a profit is earned from any special event starts with thorough planning. All costs associated with the event must be considered before providing the customer with a final price that will result in a profit. Chapter 8 Summary. A food service operation earns a profit when total revenue is more than total expenses. If an operation's total revenue is less than its total expenses, there will be a loss. A food service operation is most likely to be successful if steps are taken to maximize revenue, minimize expenses, and offer quality food and service. Care must be taken to minimize expenses when planning the menu and purchasing, receiving, storing, preparing, and serving the food. The gross profit of a food service operation is based on the difference between the cost of goods sold and the operation's total revenue. Net profit is based on the differences between the gross profit and operating expenses. Financial information is found on a profit and loss statement. In some cases, it may be necessary to estimate profits and losses. A key to determining profitability is to calculate the break-even point of a food service operation. Ensuring the profitability of a special event such as banquets and catering events require a review of the customer's specific needs. Key topics to discuss include the number of people attending the event, the menu and the style of service, the event location, and items that may need to be rented. Smaller events held in restaurant banquet rooms are typically priced based on a target cost %. Larger events, especially when rental items or temporary staff is required, are more likely to be priced based on a contribution margin.